What's up, y'all? Welcome into this video here. Today we're going to talk about what makes a good setup and what criteria to check off and how you can identify the best setups on the charts. So basically, let's jump right into the video here. So today we're going to talk about the playbook setup first. And the playbook setup is basically just finding the setup on the charts. I've created this type or this box over here that you can see with these five check boxes here that we can check off when we're looking for the best of the best setup here. So first of all, we're gonna identify the edge in the market. So we gotta identify the playbook setup. And I typed in playbook setup, and that's basically just your edge or whatever you're identifying with your edge in the market. So basically your trading methodology, edge, your playbook, whatever. So whenever you see your setup in the market, we can move on to the other ones here. So basically, we have the higher time frame to lower time frame correlation, which gotta be checked off here if you want a good setup. So basically, when we have checked off and we know that it's a playbook setup showing up here, we gotta put one on that one, and we gotta identify then the higher time frame and the lower time frame, and do they correlate? So basically, let's take a bullish example here. So let's make two examples here where we have the 4-hour over here and we have the 15, 30 minute here. Let's just say it's the 15 and 30 minute. It doesn't matter that much, but let's say we're bullish in the 4-hour time frame here, and we're just moving up now. Now this candle opened up. We have created a bottom wick. The candle is coming up here, and on the 15-minute chart, what it looked like a bearish move here, because the bearish move is basically all it is. It's basically just that wick being created off of the 4-hour time frame. So this wick that was created right here is basically just this move that was right there. So the box is aligning with each other here. You see this box over here with this box over here. So all that is in the 4-hour, the bottom wick being created, is just a move down on the 15 or 30 time frame here. So when we see that move coming down there, we got to identify a new support or something like that to begin to come up again with the 4-hour time frame here. So when we see a new support on the 15 or 30 minute time frame, we could identify this as a as a new support, an onion. In my example here from right playbook, the onion play, which is basically just a buy off of support or sell off of resistance. And we can identify that support and say, okay, now we know that the 4-hour is bullish. Basically, the daily gotta be bullish too. Let's just say this example is bullish too, and the 4-hour is bullish, daily bullish. We have the 15 creating support, we have the 30 creating support. Everything is looking great here. So we can then check off higher time frame to lower time frame correlation. So that is looking pretty good too. And now that we have both the playbook setup showing, we have the higher time frame to lower time frame correlation. Now we got to look for if we have clean range on the chart here. So when we have our setup, we have identified the higher time frame to lower time frame correlation. We have identified the setup here in the market. We got to see, do we have clean range? The way we find out if we have clean range and what is clean range is basically this. So let me get a box again here. So this is clean range. If we had support, resistance everywhere, and not just candles moving down, it wasn't clean range. But when we just have clean candles moving down, you see clean candle after clean candle after clean candle. Just see them moving down here. That's what we identify as clean range. So when we have that clean range, we can then check off that box too. Because when we have clean range here, that means that we have a lot of clean range for price to come up again after moving down clean in the past year. So when we have checked off playbook setup, we have found our edge in the market. We have seen that we have the higher time frame aligning with the lower time frame. We've seen that we have a lot of clean range coming up here now. That's a good sign, so now we can check all of those off. Now, the thing we're looking for now is what time is it? When are we taking the trade here? Is it volume time? I've posted a video, it's popping up on the screen right now, and that video shows you basically how to find volume, how to find the most high volume time possible, and really just how to identify volume in the markets and why we want to take advantage and why I want to take advantage of high volume on the charts. So talking about volume, we got to identify, do we have volume here? So I highly suggest you watch that video if you're kind of concerned about when we have the most high volume and all of that in each session and all of that. So yeah, go watch that video first if you're concerned about that. Otherwise, just jump straight into it here. And really finding the volume and knowing the volume time is really, really good. So if let's say this is New York session here, we know that New York have something called New York Stock Exchange open, and that is just NYSE that at 9:30 here. So let's say this move here to the right, or basically to the right and left, happened this support at 9:30. Now we know that we have a high volume. So if we do come down, create that bottom wick, we could see this candle begin to run up here and begin to run up at the 4-hour 2 here. So that would be lovely, and that would make a lot of sense as we are bullish here on the higher time frame. We are coming down, making that bottom wick for the 4-hour time frame there. So we have the higher time frame and lower time frame correlation. We have the clean range. We have the volume at 9:30, so we can check that off too. And what we basically want to know now is that can we enter and can we have a good exit and can we have risk management? Risk management is like going break even, taking partials. That's what I mean by risk management here. So basically, our entry would be pretty hard if we had this wick over here. We could still take the trade, it would just be different. But you just gotta know before entering the trade, what kind of entry do you want here? Like what kind of entry do you want? So what kind of entry are you entering off of? Is it the previous high over there? Or is it the current high that's mostly like right here or something? So where do you enter? Where will you exit? So where is your target up to? And probably if you had a resistance right here, we would probably go out right there at the top of the range here, because once we have a resistance, we create a new support. There's an 85% chance in an uptrend that will come up and retest that resistance. So it would make a lot of sense to go take your position off right at that resistance up there. That would make a lot of sense, and that would probably be the best exit in this this example here. So you got to know your entry, you got to know your exit, and you got to know your risk management. So let's say that in this trade here, so in that trade over there, we had somewhat over here to the left. Let's say we have something like this here, where we moved up and have moved down before here too. So let's say we have something like that. So we know we have this like resistance right here. So if you're entering right here, you could be break even at that area right there. So let's say this is like 15 pips or 15 points or something. If you depending on if you're in gold, Nasdaq, and all of that. But let's just say it's 15 pips here. That's quite a lot. So 15 pips, you could go break even right at that area because you've seen previous rejection before. So we could begin to reject there, especially when we had that steep of wick on that candle. Let's say the candle was like this and you enter right there, you could still go break even up at that range. So you got to know what's your risk management. How are you going to manage this trade? What if the candle closes below again while you're in the trade? Are you going to exit out or whatever you're going to do there? So you got to have a plan for your entry, exit, and risk management in the trade. So once you can check all of those 5 off, you basically have yourself an A+ setup. You have yourself a good setup in the market where you can execute with confidence here, especially if you have data collected. More data collected means more confidence in this game here. Remember that and really really try your best to gather as much data before you're jumping into the markets like these. So that's all for this video here. I highly suggest you watch that video, why I trade in high volume, it's called. It's on my YouTube channel. I put it up on the screen before in the video here. And yeah, until next time. So I'll see you all in the next video. See ya.